In this video, we are going to be analysing FNHC. So to get straight into it, firstly, we can see this is up over 400% as we were recording this video. Now, what are going to be key targets? We can see at 61 cents is our first deviation on the 1 year chart. Now, this is key to note because we can see this has been the intraday resistance. We tried to test it here, sold off before. We quickly broke it here, sold off quickly. And again, we just keep seeing that same thing. We break over it, but we just can't hold it. And the reason for that is, again, that is our first deviation. It will be hard to hold this level. But if we were able to hold this, and you would want to see this on probably at least a 30-minute chart, but what you would want to see is a break above this level, come back to retest it as a support, and if this level can hold, then we see more upward side on it. And so if that was able to happen, then we would be looking at targets of $85, $1.35 and $1.25, and final levels at $1.67, $2.10 and $2.84. So these would be our key resistances. Now, what are going to be key supports? And again, we're very close to one of these levels being at around 44 cents. And again, if we go to more the intraday chart, we can see if we came close to this. And we can see we broke through it. We had a bit of hesitation, but we haven't come back to retest this level. So what this does indicate to us as well is we expect to pull back to at least this level, even if upward momentum is going to continue. And the reason for that is if you see an upward move, you always tend to see a confirmation. And the reason for that is it just allows investors and traders time to think about the trade and if they're still happy to buy it. And so, yes, you may occasionally see stocks pop through these levels, but they tend to reverse to the support very quickly. And this may be what we're seeing now, but overall, before a continuation higher, so it's more likely we'll come back to test this 44 cents before we can even push or think about the 85 cent location. So those would be the key, or that would be the key support. If we broke that, then really the only other levels we have to go off is the gap fill location at around 11-12 cents. And the reason for that is all our other levels are negative, apart from our statistical mean, which is about 2 cents. But I mean, the likelihood of seeing it go down that low is not all that much. So really the key focus on this stock would be really these three levels here. The 43, again, we want to see a pullback to this level at least. Even if you're bullish on this stock, you want to see a pullback to this location because it will make the upward move a lot stronger. So we want to see a pullback to here. Then it's whether we can hold this level. If we fail, we come back to test it and move down. Then really we would just expect to fill this gap in time, and it would be something we wouldn't pay too much attention to. On the other hand, if we come back to test this level, we are able to then hold that level and push back up. What we're going to see is what we talked about before, a break above 62 cents, come back to, break through it, come back to retest it as a support. And if this level can hold, then we can expect to push to around 85 cents. But one thing to be a bit cautious with this stock is obviously it moved up around 400% today. When you see this, this is a lot of momentum, but it also means a lot of people are going to view this stock as overbought. So usually a lot of the times the next day or the next few days you tend to see these stocks sell off and just calm down a bit. So do be cautious if you're holding this stock long of the selling off that may potentially happen. Anyway, I hope you enjoyed the video. If you did, why not drop a like and subscribe and check out one of these two analysis videos.